Good morning, everybody. Welcome back to Morning Markets on Wednesday, the 13th of May. A couple of things that we as a team have been discussing this morning to share with you. The first of which was just looking at the performance of asset markets across the globe yesterday. What did we observe there? The one that was standing out was probably the performance around the US equity market yesterday, which over the past number of weeks has been pretty resilient. We did see the equity markets yesterday fall between 1.8 and 2%. A couple of factors, I think, driving that. One, we just heard about the challenges of reopening the economy and the potential for spikes in the COVID-19 infection rate. And that's not new. That's something that we have been aware of, something that the market's aware of. And indeed, it's what we have been seeing across other markets. If we look at Germany or we look at South Korea, as they have reopened, there has been a spike. So that was one thing. I think the second thing was we heard from a number of members of the Federal Reserve Board either being interviewed or giving speeches yesterday. And what did that sort of indicate? I think, one, there was a slightly more cautious tone to some of their comments, but again, probably balanced, but on the margin slightly more cautious. And that just gives people a pause or a reappraisal of what's happening and the speed of reopening of the US economy. And then thirdly, we had inflation data for the US, and that built on our comments from yesterday, really, of what we were seeing in China with the negative or the deflationary impulse from COVID-19 being evident in the US as well, where inflation fell 0.4% month on month and the year-on-year rate was some 1.4%, and that's if we exclude the more volatile food and energy prices. So that just gives you an indication of where inflation is and probably where it's likely to trend over coming months, both US, China, and then across other markets where we will see that deflationary impulse. What else were we discussing this morning? One, we touched on the support package in India, where Prime Minister Modi has suggested that there will be a package of some 10% of GDP. Interesting, that seems to be the number that a number of economies are working with in terms of the support that's required to navigate through the COVID-19 impact on economic output. So that's another indication of further support in the global economy. Turning then to the UK, a number of prints that we saw over the past 24 hours that are worth commenting on. One, we had the British Retail Consortium discussing the retail trends. As you would expect, in April it was very negative. But then if we exclude those stores that were closed, retail sales were up 5.6%, but that's driven primarily by online and food. So not a clear sort of comparative number, but it gives you some sense of what's happening. If we had looked at it as a whole, I think retail sales fell some 19% year on year in April. So there we are. That's the real impact of having a closed down economy. And that's obviously, we've seen that also being reflected in the GDP statistics, where March GDP fell 5.8% month on month. That gives you an indication as to why both the government and the Bank of England have been indicating the magnitude of support that will be in the economy and will continue to be in the economy. We also heard from the Chancellor yesterday where the furloughing scheme will be extended, and this is important. That scheme already covers 7.5 million people, or some 25 to 27% of the workforce. That's very significant and is required. That scheme is going to be extended through to October, and it is an expensive scheme. It's costing some £14 billion on a monthly basis. So that's, again, an indication of the magnitude of support that is required and will continue to be required as the economy continues to navigate its way through this. That's it for today. Please join me again tomorrow. Thank you very much.